Are you thinking about buying a home, but you're not sure what costs are involved in the process? Buying a home is a significant milestone in many people's lives, but it's essential to understand the financial obligations that come with it. In addition to the down payment, prospective homeowners should be aware of the various costs associated with buying a home. In this video, we'll explore what closing costs are comprised of so that you're not taken by surprise once you've already started the process. So sit back, take notes, and watch until the end for 2 additional fees that aren't typically part of the closing costs, but are very important to know about.
So, what are closing costs anyway? These are the expenses incurred to finalize the purchase of your new home. These costs are typically due at the closing table and can vary depending on factors such as location, property price, and loan type, and can significantly impact your budget at the final stage. While the specifics of closing costs vary, here are some common items. Escrow deposit. When you find your dream home and make an offer, the seller will require an escrow deposit. While it goes toward closing costs in the end, this check is usually written or wire transfer made within a few days of offer acceptance. This deposit is typically held by the listing agent's brokerage and demonstrates your commitment to the sale. The amount varies depending on factors such as the purchase price and local practices, but you can typically expect anything from 3 to 10% of the purchase price and sometimes even higher. It's crucial to read the contract carefully to understand the terms regarding the escrow deposit, including the conditions under which it can be refunded.
Loan-related fees. These may include loan origination fees, which are fees from your lender to cover costs of processing, underwriting, and executing your loan. Discount points, credit report fees, and mortgage insurance premiums, among others. These fees are typically around 2 to 5% of the loan amount. Title and escrow fees. These cover costs associated with the title search, title insurance, and any state fees like filing or recording the deed with your county. In New Hampshire, the title companies typically also perform the closing of the home, where both parties in the transaction meet to sign all the paperwork required to sell the home and transfer ownership. Taxes and insurance. As a part of the closing costs, property taxes and homeowners insurance premiums are prepaid typically by 2 to 3 months. These payments ensure sufficient coverage and taxes are settled for the appropriate period. New Hampshire's homeowners pay their real estate taxes 3 months in arrear and 3 months ahead, with the exception of a couple towns. So property taxes will also be prorated based on your closing date. You will also pay a transfer tax, which is a tax paid to the state to buy or sell property. This cost is typically split between the buyer and the seller and is dependent on the purchase price. And miscellaneous fees. Additional costs may include home warranty plans, notary fees, courier fees, condo fees if applicable, and other administrative expenses. These miscellaneous fees are generally minimum, but should still be considered.
Now for those 2 additional fees that are typically paid up front by you, the buyer. First are your inspection fees. Home inspections are an essential part of the home buying process. They aim to uncover any potential issues or defects that may not be visible during your initial walkthrough of the home. They are completed by a third party that is certified to perform the inspection, which can be referred to by your realtor, or you can use the internet to find one in your area. Inspections may include a general home safety inspection, pest inspection, radon inspection, and water quality inspection. Your costs will typically vary based on the location and the size of the property, but budgeting around $400 to $800 per inspection upfront is a reasonable estimate. Investing in inspections can provide peace of mind and help you negotiate repairs or adjust the purchase price if significant issues are discovered. And the appraisal. Lenders typically require an appraisal to assess the fair market value of the property you intend to purchase. An appraiser, often hired by the lender, is a third party that evaluates the home's condition, size, location, and comparable properties in the area. The appraisal cost can range anywhere from $300 to $600 depending on the property's complexity and location. It's important to note that you, as the buyer, usually cover these expenses regardless of whether the sale closes or not.
Now that you're aware of what closing costs are and what they involve, you can better prepare yourself for the journey of buying a home and ensure a successful transaction. You'll also want to watch our other videos on the pre-approval process and what a real estate title company does, so that you can start house hunting with confidence. Finally, if you're ready to take the plunge into the home buying process, check out our home search tool at graniteliferealty.com or reach out.